Hi, everyone. Thank you very much for joining our virtual mining conference today. I think it's a very timely conference and looking forward to our gold panel here with a great slate of companies. And I'm Tate Sullivan. I cover the mining sector in Maxim Group's equity research department. And introducing an alphabetical order by company name, we have Scorpio Gold, ticker SGN on the TSXV, CEO Zayn Kalyan. Soma Gold, ticker SOMA on the TSXV. We have VP of Business Development, Julian. Hi, Julian. Thank you for joining. From Troilus Mining, ticker TLG on the TSX, CEO Justin Reed. Thank you, Justin. And from Vista Gold, ticker VGC on the NYSE American, CEO Fred Ernst. Thank you to Fred for joining. And we're going to go around the globe here. And we were just talking before jumping on about some recent M&A and acquisition M&A announcements in the gold sector too. And staying in alphabetical order, I'll start with you, Zayn. Can you give an overview where your project is to start and recent mineral resource estimate news from yourself?
Yeah. No, thanks, Tate, for that, and happy to be here and happy to have the opportunity to be on the panel this morning. So Zayn Kalyan, CEO of Scorpio Gold. Our core asset, Manhattan, is located in the basically sandwiched between the Walker Lane and Carlin Trend in Nevada, in the US. We have a 740,000 ounce 43-101 compliant resource at 1.26 grams per ton. So fairly significant grade, but we're well on our way to expanding that quite rapidly over the next year, with a core goal of 2 million ounces by the end of this year. Fully financed to do so. We're very happy to be operating in Nevada. I think it's a great jurisdiction in the top three in the world consistently, as rated by the Fraser Institute. And I think definitely a lot of tailwinds in the sector today, and I think things are just getting started as well. I think the gold has definitely showed a lot of resilience in the geopolitical climate today, and we just kind of have to work through a little bit of the instability and choppiness that exists in the market. But as I think we're fully financed to kind of execute on our plan here over the next 12 months, and we're pretty excited to continue to show accretive growth and really build out our valuation, but also build out our inventory and really work towards ultimately building a mine.
All right. Thank you. And we'll circle back. And keeping it alphabetical, Julian, from Soma, you are currently producing revenue in from operations in Colombia. Can you start about a little historical context and footprint of your operations, please?
Yeah, happy to. And thank you very much for having us on this panel. Pleasure to be here. Soma Gold is a Colombian gold producer. We have been consistently producing around 20,000-30,000 ounces a year out of the Antioquia department in Colombia. So we currently have two mills. The first one, the El Bagre mill, is currently being served with ore from the nearby Cordero mine. And together with the El Limon mill, are part of a fairly large consolidated 430 square kilometer land package in Antioquia. It's situated right smack in the middle on the O2 faults and is right between Mineros' dredging operation, which produces around 100,000 ounces a year, and Aris Mining's 350,000 ounce underground operation in Segovia. So after acquiring the El Bagre mill and associated mines back in 2020 for around $5 million for Mineros, we operated the La Haye and the Mangos mine up until around 2023. When we then transitioned into the Cordero mine, which has been operating ever since. So Cordero mine is an underground mine, consistently producing around 450 tons a day through mechanized or conventional mining, always depending on where we are on the deposit. And as I already said, we have consistently produced around 20,000-30,000 ounces a year. It's predominantly gold driven, but we also have silver as a byproduct, depending on the commodity prices. I would say it's a 99 to 1% split. And these kind of operations have allowed us to do meaningful exploration work in Colombia. We are drilling around 40,000 meters in 2026 because we're cash flow positive. And we are very excited about Colombia itself these days.
Thank you. I apologize. I'm getting a fire announcement behind me in the building, not on my floor, fortunately. So if you do hear some background noise, you gentlemen might need to take the helm in leading the. So I'll do my best if you hear some background noise. Justin, shifting to Troilus too, you're advancing around the world. You're in Quebec. Can you give similar to the other gentleman a background what your your main near-term initiatives are at Troilus with your project footprint.
Sure. And thanks for having us, Tate. Over the last 6 years, we've invested about $300 million. We've drilled 400,000 meters on the past producing Troilus mine, which operated for 14 years, producing over 2 million ounces of gold and 70,000 tons of copper by Inmet Mining. They were hostily taken over by First Quantum and shut down the mine because their focus and capital allocation was all on Cobre Panama. And so we were able to secure a past producing mine that was on care and maintenance that actually went into remediation or reclamation. And over the last 6 years, we've identified or we've defined over 13 million ounces equivalent, 7 million ounce reserve. We have completed PA, bankable feasibility, basic engineering's done, and we are now about 45% through our detailed engineering. We're a $1 billion company. We have about $160 million in the bank, and we are in the final stretch of permitting. We'll be targeting a 50,000 ton a day operation, so a little larger than Agnico's Malartic mine, producing 350,000 ounces equivalent over a 25-year mine life, which at today's prices would generate about $500 million US in free cash flow a year. So our team's grown from 15 people 2 years ago to about 175 people today. We have 75 engineers with our EPCM contractor working hard, and we're mobilizing 350 people to site full time right now.
Yeah, thank you for that update. And Fred, shifting to you, I wanted to get an update from your operations in Australia. We're truly representative in different regions.
Well, Tate, thank you for inviting us to be part of the panel. This is an exciting opportunity. As you mentioned, we have the Mount Todd Gold Project, which is in the Northern Territory of Australia. This is one of Australia's largest undeveloped gold projects. We have 10.6 million ounces of total resource, 9.1 million ounces of measured and indicated. We have for years been advancing and studying Mount Todd. We designed it initially as a 50,000 ton per day operation, but last July we announced the results of a feasibility study in which we've taken a step back from that. I'd like to think that we've right-sized the project to commence at an initial scale of 15,000 tons a day, with the project being expandable, and we are very excited about that, as it's significantly lowered the capex for the project from over $1 billion to $425 million now. This is a brownfield site. It operated in the 1990s, and as a result, we have paved roads to the site, tailing storage facility with capacity for 90 million tons, freshwater storage reservoir, power line to site, natural gas pipeline to site that we'll use to generate our own electricity much cheaper than we can buy it from the grid. And late last year, we made the decision to move the project forward on our own, where we had previously been looking at needing a joint venture partner. We are now taking steps to be able to commence detailed engineering and design next year.
Thank you. And want to get back to the company-specific projects as well, but since I have both of you and I'm looking at my left screen, I mean, volatile gold prices recently. Zayn, you mentioned the gold price outlook. I mean, still very profitable levels. What has been moving the gold price recently, if we can already have some questions from investors?
Yeah, like obviously the kind of elephant in the room is the geopolitical situation in the Middle East has definitely affected the overall market and kind of outlook on inflation and interest rates and kind of where things are going to go is definitely affecting the price. But ultimately, I think there's been a lot of parallels, I think, just drawn in the financial media about looking at history and looking at how inflation and kind of potential record inflation that could be driven by the price of oil, et cetera, could affect the price of gold. But I do think we're in a little bit of uncharted waters here, or maybe not uncharted waters, but a different situation than the norm than what we typically would see. Primarily driven by the fact of this, call it what I'll call the debasement trade, or kind of the move away from the U.S. dollar and the shift in central banks' focus on gold as a reserve asset versus treasuries. But ultimately, yeah, I think it's a very tumultuous market. I think it'll be interesting to kind of see how everything plays out. But ultimately, I think the case for kind of an increased gold price over the next year is definitely there. And I don't think that that's going to let up. I think you just in the uncertainty in this world is definitely going to drive further adoption of gold as a reserve asset, and ultimately this move away and shift away from the U.S. dollar is, I think, not gonna let up. And I think the U.S. government and is in a very difficult financial position with the current position on the debt, and I think that'll also really kind of shift how central banks and ultimately also how just general investors look at gold as an asset.
Thank you. And Julie, I want to hear how the gold price how you factor in the volatility with your current operation. But there have been recent M&A transactions. We mentioned Agnew Co. with Rupert. Yesterday, Rupert's shares went up 60-odd%, and then G2 a couple weeks before that. It's interesting the majors taking advantage of what prices have done. And Julian, for your operations in Colombia, do you hedge any of the currency, and would love your comments on gold prices as well too.
No, we like to remain unhedged. I think everyone in the gold space, especially after such a long time being in a bear market, is finally relieved to see such a strong momentum. I still think that there is a long way to go. I believe there's also still some capital sitting on the sidelines. I believe that there are also some retail investors that are still waiting for the right moment. And seeing these kind of M&A transactions is actually something very encouraging, I think, for our industry. That tells that at least the senior mining companies still believe that there is a long way to go, because there is still some room where they see some value uplift with these kind of transactions. And so I think overall we are very well positioned right now to all of us to benefit from this gold price environment. Of course, it also puts some pressure into the market in terms of industry-wide labor shortage, right? So you need to be a little bit more competitive, a little bit more creative, but nonetheless, it's not something that can't be resolved. We are overall very happy with our operations in Colombia and keeping them unhedged. I think there will remain some volatility in the gold price over the coming months, but if you believe in these kind of big buckets of geopolitical tensions, uncertainties, fiat currency, demonetization, central banks repositioning their reserves, and also thinking that maybe some retail and institutional investors from the general pool might enter the market, I think you'll have your answer where the gold price may stand in the next 12 months or in the next few years.
Yeah, related to currency management is my theory in China, but then also I mean with currency volatility, and Colombia's currency compared to the U.S. dollar has had meaningful moves here. I've seen recently, but a separate topic. But Justin, would love to compare to what you have budgeted or printed in feasibility studies for your project historically versus where the current price is, and would love your comments on the recent pricing too.
Well, I mean, it's absolutely incredible, and you know, I concur with everybody's comments so far. But you know, if you loved gold 3 months ago, or you liked gold 3 months ago, you really love it now, to tell you the truth. The war as it is really a moment in time, and I think that basically the whole economic platform of the U.S. is set up for devaluation of the U.S. dollar, which is just absolutely fabulous for the gold price going forward. We're not going to see central banks slowing down on their purchasing and selling treasuries, which has been a major driver for us. And then we put our feasibility out in a year and a half ago, and we used 1975 gold, and a low grade bulk tonnage 50,000 ton a day project drives kind of high teen IRRs, and Fred will attest to this because he's been dealing with this for a long time as well. It's the these low-grade bulk tonnage deposits come with huge capexes and low IRRs, but what the market fails to remember quite often is that they're absolute cash flow machines the moment you can sink that capital. And so our capital is going to come in at 1.3 billion US. We've already secured 1 billion in debt financing from the export credit agencies. We'll be closing on that shortly and be bringing in kind of the final financing shortly. But when you're carrying $1 billion of debt on a project, hedging is going to be part of your capital stack, if you will. And so we see the daily hedge books, and you can buy puts right now, which are great. It costs you 3 years out, 2 years out, about $240 an ounce. But what I really focus on is kind of the zero cost collars, right? Your min-max contracts, if you will. And 2 years out, I'm seeing floors, as from Deutsche Bank this morning, that are floors of $4,000 and ceilings that are knocking on $9,000. Those kind of spreads provide a huge amount of flexibility when you're thinking about moving forward with a large industrial spend. And so, the outlook looks great. And I think that all of us on the panel couldn't be operating in a better time for our industry.
Thank you, Justin. And Fred, would love to, wherever you want to take the discussion on the gold price, but also with what you have budgeted in your project as well, too.
Yeah, I agree with Justin. If you liked the gold 6 months, 12 months ago, you've got to love it now. Like Troilus, we used a price that's substantially lower than the current market price. When we did our feasibility study last year, we used $2,500, and at just taking the gold price to $3,300, the economics of our project roughly double from an after-tax NPV5 of 1.1 billion to 2.2 billion. So $4,700, I'm one of the happiest CEOs on the face of the planet. What I might add is this, the geopolitical tension, the war in the Middle East has been raised. I was in Zurich last week for the Metals Forum Europe conference, and while there, I had the opportunity to talk with a number of people from the Middle East or who have very close ties to the Middle East, and I think that we would all say that the past has suggested that when there's turmoil and unrest and conflict like this, that we would expect the gold price to go up and not down as it has. But in talking with some of these individuals with closer ties to the region, one of the things that was pointed out to me is that with the Strait of Hormuz closed, that it's not just oil that's affected. It's many commodities that pass through that narrow strait, and that many of the countries in that region whose economies have been, let's say, not frozen, but significantly restricted by their inability to export, have turned to their gold reserves as the reserve, the currency of last resort. And so that's an interesting explanation for why we're seeing some of the downward volatility during this stage of the conflict. But I share the view of the others on the panel. I think longer term that we have a very bullish view on the price of gold, and even if gold were to stay where it is today, I would be extremely happy, and our shareholders would see tremendous economic rewards from our success in getting Mount Todd into production at this gold price.
Well, great. We had questions, so thank you for circling around and talking about the price and geopolitical politics as well. And let's get back to the projects, if you don't mind, a little bit. And Zayn, circling back to you with your footprint in Nevada, can you give a little more historical context when you formed your project footprint, and you mentioned liking the Nevada district and next initiatives for development as well?
Yeah, so Yeah. Manhattan's a historic district. The modern mine at Manhattan was built by Howard Hughes in the 1970s with Summa Corp, and was most recently operated by Echo Bay until 1991. Kinross functionally sat on the majority of the project until 2021 when Scorpio was able to consolidate the district. And really our resource sits functionally on the property boundary between what Kinross owned and what Scorpio owned. So in 2021, we were able to consolidate 95% of Manhattan, and that was really ultimately what unlocked the opportunity. So we took over the company, recapitalized it, restructured it in 2024. This is Scorpio, and have raised significant capital since then. Have the support of some very strong mining investors and entrepreneurs, headlined by Ross Beatty and Eric Sprott, who did an exclusive placement in September of last year. And ultimately, it's a prolific district, long history of mining, as much of Nevada is. It's a great place to operate. And we fully believe that it's kind of flown under the radar for a long time. And it truly is district scale, but that's really mainly been driven by disseparate ownership. So you have a district that's had 2 or 3 different property owners and very tough to consolidate. But with our ability to really bring everything together and really drive the asset forward, we're pretty excited to unlock that value over the next year. Ultimately, 2 million ounces is our target this year, but we do believe that this is a 3 to 5 million ounce system, and we're pretty convicted and comfortable kind of showing that or discussing that forecast. And I think that's pretty evident with everything we're doing. And we've been putting out very consistent drill results every 2 to 3 weeks, just showing accretive growth on our resource, and we're going to continue to do so throughout the rest of the year. And I don't think we're going to let up anytime soon. We have 3 drills active in the field today, and I have the goal of having 5 drills active by the end of this year. So just being very aggressive in growth, and ultimately really driving out that resource. And from an infrastructure perspective too, I'd also add that we have a lot of infrastructure, established water rights. We have a 400 ton per day permitted mill, which gives us some permitting latitude too. So it's not just about growing the resource, but also ensuring that the project's de-risked from an infrastructure standpoint and development standpoint ultimately as well.
And for investors, I really like, Zayn, your page in your presentation deck showing the differentiation terms in terms of the recoveries and the size of your project as well too, in terms of the public landscape of companies.
Yeah, grade and recovery are really kind of the 2 differentiating factors for us. I think there's very few kind of blue sky Nevada resources in Nevada that have that combination of being an oxide resource with healthy recoveries north of 90% from a full mill circuit, high 70s from heap leaching, alongside grade, having that kind of double the average. We have more than double the average grade for a Nevada open pit resource. So it really does stand out economically in that respect.
Yeah, that's one thing I do when we're jumping around the world here as an analyst, just look at the investable opportunities in different regions when I look at all your companies as well too. And Julian, since we have you in Colombia, and you talked about a little bit earlier, and when we talked before, operating in Colombia, has it improved in the last year compared to previous years? And I believe it has. And how many different projects do you have in Colombia, please?
I think the investment environment has definitely improved in Colombia. It's a very sought after jurisdiction, I would say. We have seen recent investments by Agnico Eagle into collective mining. Mineros just acquired a fairly large project from AngloGold Ashanti for around $70 million US. It comes with some local nuances, getting permitting done. But if mining companies do these kind of transactions, especially right before a federal election, I think it tells you that people believe in a jurisdiction and that people actually double down right now. I mean, our operations, the El Bagre mill is 100% owned through our subsidiary, Operadora Minera. It sits in the northern part of our land package. Around 20 kilometers to the south, as the crow flies, 40 kilometers by road, on paved road, sits our El Limon mill. It's 100% owned by our subsidiary, 4 Points Mining. So El Bagre is around 400-500 ton a day processing plant, but we have the permits to go up to 1,000 tons. The El Limon mill currently has an installed capacity of around 225 tons a day, but permitted up to 400. So on a combined basis, we actually have 1,400 tons a day. We have quite a bit of excess milling capacity, but we have put certain initiatives in place to fill the mill strategy. And Antioquia in general, I would say, especially around El Bagre, Zaragoza municipality, Segovia, the economic driver is mining. There is mining, I would say, is in the people's blood in Colombia and especially in Antioquia. We have very good support coming from all sides, from the communities. We have very strong ESG program in place, have been rewarded with excellence in 2 consecutive years now. And I think the overall area is heating up quite a bit. We have hundreds of mines in that area of Colombia, and the federal and the provincial government are actually very supportive of the mining activity. What they, however, want to formalize more so is getting the ore into centralized processing plants, which will help nature, but it will also uplift everyone in that area, local communities, the small-scale miners, the more professional outfits such as Aris Mining, Soma Gold. And I think it's a win-win situation for everyone. We try to do as much as we can and try to pursue as much local employment as possible. We have around 600 people working in Colombia for us right now, with 85% sourced from local municipalities in that area. So we try to reinvest and re-engage with all parties as much as we can and be an economic driver in that region.
Thank you for that. And jumping back to Quebec, Justin, with Troy listening, before we got on our panel, I was looking at your potential construction decision timeline, and you mentioned earlier, what are the key development timeline considerations for you? Is it before the end of this year to start construction? Did I see that correct?
Yeah, I mean, it's all permitting dependent, of course.
Okay.
And, we're 3.5 years into permitting. We submitted our ESIA, which is our final major gating item, provincially and federally in June of last year. And so that full review is well underway. And, we're targeting initial construction in Q1 of next year. However, as a past producer brownfield site, we're still sitting on active mining leases. And so what we're able to do if the capital is available, which for us right now it isn't in the bank, is we're mobilizing pre-development work. So the 350 people going to site, we're moving roads, we're moving the power line, we're moving the substation, because most of those things are now sitting inside a pit when you're not in a $350 gold environment. We're dewatering. We're moving 30 million cubic meters of water. We've already moved 7. We're fully permitted to do this. The one pit is empty. We're now moving into the other. We're diverting a diversion channel from the past operation. As well, we're moving 6 million tons of rock this year. 4 million tons is call it pre-stripping or waste, but that's we're bringing in mobile crushers right now to produce aggregate for roads, gravel for pads, and sand for cement. And then we'll continue some geotech work and some bulk sampling on the ore body that's exposed at RD7. So, the one thing nobody on this panel can control is permitting. We can do our best to manage expectations, but ultimately we file into the hands of the bureaucrats that we all hope we have control on and that we have a good process on. So we're able to, as a brownfield site and a mining lease in Quebec, we hope we can mitigate delays by spending risk capital now. And as a single asset company, our outcome is binary. Right? You're either building the mine or you're not, and we're building the mine, or somebody else is going to stop us. So we're very comfortable spending that capital. Our shareholder base has given it to us to advance this as fast as possible, and so I think this pre-development work is going to be able to mitigate anything, and we'll have 1,000 people on site 12 months from now for 2 years building the mine.
How many people currently on pre-development work? Around 300, did you say?
Yeah, we're building the camp from 150, which is full right now, to 350. And then we have to make room for the people to build the 1,000-man camp. And so it is quite a process. We have 7 drills turning right now, 5 geotech, to exploration, and everything's mobilizing. So it's a very busy place right now.
Okay, great to hear. It sounds like a lot of developments in Quebec in general, and with your developments as well too. And Fred, shifting to Vista, you mentioned a updated feasibility study too. Is this next step more advanced engineering work following that, or can you give an update on the timeline? You referred a little bit to it earlier.
Yeah, maybe just kind of build on what Justin was just saying. Permits are everything. And while we finished the feasibility study, and there were some recommendations for some follow-up optimization, that work is in progress. We've drilled in split core and sent core to ALS MTech in Perth. Met testing that will confirm grind size, provide data for detailed engineering. We've got geotech drill running right now. We hope to be able to steepen up the west wall of the pit, but our biggest activity is permitting. We had obtained all of the permits for a 50,000 ton per day operation in the last permit being received in 2021, but the environmental regulatory area is a dynamic area, and there's been changes in legislation. And with the changes in the project scale, scope, and the results of 4 additional drilling campaigns since those permits were issued, we are in the position right now of modifying and amending the permits that we already have. We already have what's called Aboriginal Areas Protection Authority certificates. We're requesting and working with local Aboriginal groups to expand that authorization to the west of the project area. We once we have that authorization, we'll be able to file our EIS amendments. We have our mining authorizations that are being updated. And then we, the uncertainties, there's been changes in federal environmental legislation, and we have just completed a end of wet season ecological site investigation. We'll be doing another one in late July, August, and then we'll be filing the application for an updated federal environmental authorization. So, we'd like to, like Justin said, we'd like to think that those are things that we can control. We maintain regular and constant communication with the regulators, with the agencies, and have a good sense of where they're at with their review and approval processes. And for us, there's going to be announcements through this year that certain different permits are approved and we're making progress. We honestly think that the last authorization, this federal authorization, will probably not come until the middle of next year, and that's going to be the driver for our decisions to commence detailed engineering and design. We're actually looking to have all of our front-end engineering and design well underway or completed by the time we receive that authorization, and be able to essentially make a definitive investment decision to move forward with the project at the time we receive that last authorization.
Okay, thank you. Thank you, John. We've circled around, and I want to make sure that we touch on all the topics that you want to. So I'll start the circle to talk about closing statements as well too, and with you, Zayn, going forward and what you've seen in the industry in general. What do you think it's most important for you to show investors here in the near term? Is it the higher reserves that you mentioned earlier, but any closing statements?
Yeah, I think building scale is our core goal here over the next year. Is we've maintaining that average grade, and the recoveries kind of speak for themselves, but really core is showing that we can get to scale, because that's really the kind of the ingredient that we're missing, and achieving our goal of 2 million ounces by the end of the year is really key to that. Ultimately, I think the geopolitical climate's great. I think being in Nevada is really positions us in a unique way. We're very candid that ultimately our goal with this company is to sell it to a developer, a mid-tier or major who will take it through to development. We are strategically located 10 miles south of the largest mine in southern Nevada, which is Kinross's Round Mountain. So there's some logical or evident synergy there, but it's not the only end game for the project. I think there's a lot of standalone potential as well. And I think Nevada is a great place to operate, and there's a lot of attention on the district. You have a lot of mid-tiers and majors who are looking to get into Nevada, and the series of transactions and the environment that we're in that we've seen over the last, call it 6 weeks, 8 weeks, which I think will only continue here throughout the rest of the year. I think it's a great environment to be in, and we're very well positioned in that environment. So ultimately, this time next year, I'd like to be having a little bit more serious conversations about M&A and kind of seeing where this project ultimately goes. We're already having early discussions with a number of parties, mid-tiers and majors who have interest in the project and just want to learn more. So I think our goal, our plan here for the rest of the year is just keep our heads down, grow the resource. Hopefully that translates to accretive growth in our share price and market cap, and just let the drill bit do its work and keep building. And that's where we want to take the project.
All right. Well, thank you for the update on Scorpio Good. Always good talking to you. And Julian, any closing comments on Soma Gold and anything we didn't touch on earlier that you'd want to highlight for investors?
Yeah, I think we have currently several initiatives on the go. We acquired a new ore sorter for around $2 million from Tomra late last year. So we're trying to improve overall material utilization and try to reduce the plant throughput, which will open up a little bit more access in our processing plant. But what it does is essentially remove non-valuable material fairly early on in a stage where you would put in quite a bit of energy intensive crushing and grinding. It improves overall the feed consistency and brings quite a bit of predictability in terms of the overall ore supply. However, also have several other mines coming online with Diamantina, Aurora, Escondida. So Diamantina, we're actually quite proud of it. It's one of our formalized mines. It's a 40-ton-a-day operation. So that would make up or increase our current production by another 10%. And then Escondida, we just closed the transaction late last year. And it's a very high grade, or we expect it to be very high grade based on the underground sampling and the past producing scenarios over a fairly thick vein system. And then on the other hand, I also just came back from Colombia to aggressively work on the implementation of a third-party ore purchase program to make sure that we actually keep pursuing this kind of fill-the-mill strategy in combination with a much more accelerated formalization strategy. So I think Soma has different options on the go. We have our own mines. With Cordero, we just applied or put our application in for the Nechi project, which is just 60 kilometers to the north of El Bagre, which can essentially double our current production, get us from the 20,000-30,000 ounces a year to around 40,000 to 60,000 ounces. And then in conjunction with the implementation of third-party ore purchases and this kind of accelerated formalization strategy, I think we have pretty good visibility in terms of ore sources. But as well as Zayn already said, we have to put our heads down, keep grinding away, make sure that we actually deliver on these kind of strategic objectives we are putting out to the market, and keep delivering. And then I think you will be fully rewarded in this market. I mean, we currently have around 150 million market cap US, going up to 65,000 ounces, and I think there's much more shareholder value we can surface for them. And management is fairly aligned with 60% ownership.
Yeah, well, thank you. Thank you for the great updates on Soma Gold as well too, and rotating back to you, Justin, at Troilus, and you gave great comments earlier about the financing availability and the spreads on the hedges too. So thank you for that. Any comments to circle back to or leave investors with, please?
No, it's just like the other participants. For us, it's about execution. Our operational teams in place, our project teams in place, our corporate teams in place. 80% of our financing's in place. We'll break the back of that very shortly. And I would say we have great visibility on the permitting as much as we can. And so for us, it's about head down. That's been said already, but just delivering this project and our goal is to be generating cash flow at the end of 2028, early 2029. And so now we're just going to try and beat Fred to production. That's my only goal.
Thank you very much. And thank you for the comments on Troilus. Great to hear from you. And we have a great representation of companies here. And Fred, do you want any closing statements, please? Thank you for joining as well. Great talking.
Well, I thank you, Tate. I hope Troilus does beat us. It'd be a tragedy if you're delayed and we catch up with you. But we need new development and construction stories and successful stories. So wish you the best. I lived in Latin America for 11 years. I personally have no experience with Colombia, and so I don't mean to throw any shade on Julian and their location, but Australia, Canada, the U.S., Nevada specifically are great mining jurisdictions. We're thrilled to be in Australia. We have a great project. We talked about the optimization studies we're doing, permitting, project execution planning is in place and started. We've not talked about what we're doing with regards to building team, and since the first of the year, we've added 5 people to an executive office in Perth, a permit or approvals manager in the Northern Territory, and so we're building the project development team in Australia. We've always said we wouldn't manage this from Denver, and so we're doing that. We're very happy to have a project in the Northern Territory of Australia. Our project is at the southern end of a larger historic gold producing district, the Pine Creek District, that has over 100 years of history in gold production. We're about 40 kilometers south of Agnico Eagle's Union Reef's operation. Also in the territory is Newmont's Tanami project. I think the great opportunity for shareholders and for investors that I would highlight is if you were to go look at our corporate slide deck, there's a slide, a couple of slides from the end that shows our valuation, reserve, and annual production capacity or estimated annual production compared to our peers in actual operating mines. And we have a market cap of roughly 300 million US. We think that we're undervalued. We're a little bit farther down the curve than Justin is, but that's where we're headed. And as we make the transition from being a developer to a producer, we think that immediately we would be valued more like a Bellevue, that our market cap would be something in the order of $2 billion. But aspirationally, we think that with the production, the kind of project that we want to build, that we would be valued similar to Capricorn Metals and see a valuation that could be upwards of $4 billion US. And so that's the opportunity. And I think that's what all of us are striving for, is to get to the point that there's recognition of the value, recognition of the hard work, the hard yards that have been earned by each of us. And certainly this is the gold price environment to do it. And so I'm excited for each of the companies that have participated in this panel, and I hope that all of us are able to deliver the kind of value that we envision. And I would just comment that if we are successful, that there's going to be some very happy shareholders and some shareholders who are much better off economically than they are today as a result of the hard work of each of our teams. So that's where we're headed. I sense that's where we're all headed, and I'm particularly excited about our prospects at Vista Gold, and pleased to have had the opportunity to be part of this panel, Tate. So thank you.
All right. Well, thank you, Fred, and thank you to all. Great timely comments on all your projects, all the regions you operate in, and the gold price as well too. And thank you for the time today, all of you.
Thank you.
Tate.
Thank you.
Thanks.
Thanks.